So this is a presentation that we held at the BTC Prague conference last weekend. So the time there was a bit limited to 15 minutes. So we had to go through it fairly quickly. But the idea of the presentation that we're holding here is just to provide a high-level overview of how we can build a Bitcoin-based financial system using sidechains and specifically the Liquid network, and why it's important to Bitcoin as well as Liquid in terms of succeeding. Okay, so let's get started. So the key points I wanted to cover with the presentation are the ledger basics, how ledgers operate, the premise of ledgers, who controls them, etc. The second point is delivery versus payment, which covers how settlement obligations between the different counterparties are discharged when you move or trade assets on ledgers. And finally, the last point is how we can build a Bitcoin-based financial system with the knowledge gained in the two previous points, and specifically how we can do so building a blockchain-based financial system, which is based off a sidechain such as Liquid. Okay, so the first point is in terms of a ledger, how they operate. What is a financial institution? So a financial institution is, they are ledger operators, nothing more, nothing less. That's all they do. They operate a ledger. It's amazing how big the financial ecosystem has grown, considering that it's all they do, that they don't really produce anything aside from ledger entries, but and the central account operator, the ledger operator, they control who has access to the ledger, under what premise, how account updates occur, how assets are issued, etc., etc. And these ledger operating institutions operate normally within a within jurisdictional boundaries, so they're not global or permissionless at all, such as Bitcoin. So if client A wants to transfer money to client B, they will need to ask the ledger operator for permission. So everything around the permissioning structure is on the ledger operator. And then if we look at what's a financial system, so a financial system is basically a collection of ledger operators and how they interact with each other. So how do you move ledger assets from one ledger system to another? How do all of these ledger institutions interact with each other? And within the financial system, there's lots of different types of institutions, such as exchanges, central banks, brokers, clearinghouses, banks, insurance companies, etc., etc. Some of these ledgers are primary issuance ledgers, and other ledgers are ledgers which take care of clearing and settlement between other ledgers. So there's a wide variety of different types of, shall we say, services that the different ledger operators fulfill. So if we look at the ledgers, there's two primary ledgers really. One is the payment layer ledger, which is normally the central bank money in whichever jurisdiction the banks operate. Since this is Europe, I just took a Euro example, but if you look at the central bank, the only ones who are allowed to hold accounts with the central bank are the commercial banks of the system. There is a cash component, obviously, that's freely circulating amongst the public, but it's getting smaller and smaller each day, and they try to discourage it. But the main point here is that the ledger operator who operates the central bank money layer, which is really the only place where central bank monies exist, is in the central bank accounting system. So how does the banking system work? So below the central bank, you have commercial banks, and these commercial banks have representations of their account balances, which they hold with the primary ledger or the central bank. So if anyone holds cash in a bank, you actually hold commercial bank money. You do not hold actual euros. You hold what's in essence euro representations, which means you have pegged euros or tethered euros or wrapped euros or whatever you want to call them. So within a ledger system, updates are normally real time. So client A can transfer to client B in real time without much difficulties, provided that the commercial bank accepts the transfer. But if you want to transfer between commercial banks, the commercial banks themselves need to update the account balances on the central bank level before the interbank transfer takes place. So if client A transfers money to client C, you're actually asking commercial bank 1 to transfer on the central bank layer cash from their account to the commercial bank of the recipient. This takes place on what's called a net deferred settlement model. So all the net outstanding balances which the banks owe each other, they get buffered, and then in a few certain intervals each day, they conduct what's called clearing cycles, at which point all pending payments clear. So that's when the central bank accounts are updated, which is why if you make a transfer on a Friday afternoon, the recipient may not receive it until Monday morning or so. So that's the structure. And if you look at this and think about it a bit deeply, we have something where the central bank is actually the main chain, and the commercial banks who have representations of what exists on the main chain, they would be effectively side chains of the main chain. So it's a very common structure within, shall we say, ledger operations to have main chains and side chains where the shall we say, child chains or child ledgers represent assets which are held in the main chain. So the other primary issuance ledger is obviously the asset ledger or the securities ledger. These are held with central securities depositories in the different jurisdictions. And the account structure and hierarchy are basically the same as the central bank. It's basically essentially financial institutions who hold accounts with them, and they hold the assets of all of their clients with the central securities depository in their name. It is possible as an individual to have accounts directly with the central securities depository, but it's not very common. So the same type of structure where the broker account or the financial institution through which you hold your shares, the shares are held in the broker's name on your behalf in the central securities depository. And the broker will keep track of the internal disposition of the securities between their, how they're distributed between their clients. Same philosophy or same type of structure where you have the main chain in the primary issuance layer, and then anything that comes below, or all these institutions who hold accounts with the primary issuance institution, they would be considered a side chain as they have wrapped or pegged or tethered balances which are represented in their accounting systems, but they are not the actual assets. So that's a bit about how the existing financial system works with ledgers and the permissioning. So in terms of how blockchains work, so what is a blockchain? So a blockchain is an amazing innovation which upends and turns the whole permissioning structure of how ledgers works upside down, and moreover they're global in nature, so anyone can access them over the internet. And a blockchain is also a ledger system, but the big difference is that the account updates are controlled by the user, not by the ledger operator, which is why we've had many questions around KYC, AML, from the regulatory perspective, from their perspective, how to manage these type of should I say conundrums when it's the user who controls the account and it's open access. So regardless of which blockchain you're looking at, the basic premise is the same, that is operated by the user as opposed to the ledger operator. So why Bitcoin? To build a financial system, as we looked at before, we need basically two components. One is the settlement of payment layer, which in normal financial systems or normal financial jurisdictions would be the central bank monies of the jurisdictional system. But with the advent of Bitcoin, we have a settlement of payment layer, which is global in nature, and where Bitcoin is the absolutely most dominant, should I say, cryptocurrency out there. There's really no other alternative to Bitcoin if you're building a settlement of payment layer on the internet. The one, shall we say, question we have is around how do we scale Bitcoin to become a settlement of payment layer globally, which can scale, which is where sidechains come in. So Bitcoin would be the settlement of payment layer in any financial system that it needs to operate. And to that settlement of payment layer, we need a securities issuance layer. So Liquid, with all its properties, is effectively the primary issuance layer for securities or for asset issuance. So Liquid here is a sidechain. So even if we call Liquid a sidechain, it's a sidechain to Bitcoin because the native asset for payment on the network is Bitcoin. However, Liquid is also the primary issuance chain for assets. So you can both issue non-permissioned assets such as bearer assets, as well as permissioned assets, which are securities, or they could be securities, where you have a permission structure with a 2-of-2 multi-sig setup. So any transfer that takes place needs to be co-signed by the issuer so that they approve the transaction. But the main point here is that all of a sudden we have a securities depository where the issuance of assets is permissionless, it's controlled by users, and the settlement of payment currency is Bitcoin. So using the Liquid network, we can all of a sudden tie all the, all the pieces together to be able to create an actual securities ecosystem and build capital markets around Bitcoin. So if Bitcoin is to scale and succeed, having a payments layer is fantastic, but a payment layer on its own is not enough. We need a securities ecosystem and to build capital markets where you can have lending and equity issuance, etc. And there's no one else that has come as far as Liquid and has all the building blocks contained within it to be able to develop such a system. Yes. All right, so that was the first section of just the ledger basics of how things work in the existing financial system, how things work with blockchains and the permissioning structure, and how we can build a financial market using, or a capital markets using Liquid as the blockchain-based primary asset issuance layer. So with regards to financial markets, they have three main components, where one is price dissemination to widely disseminate the price of the different assets which are traded so that anyone can establish or understand what a fair market value price for an asset would be. The second aspect that they deal with is matchmaking, so that you match two counterparties together. And lastly, after the matching takes place, that they need to assist and ensure that delivery versus payment happens without any counterparty risks. So delivery versus payment is the discharge of settlement obligations which arise as a result of matchmaking. So if we look at how the existing financial system works, so the slide here may look a bit convoluted, but it's really quite simple. You have the exchange that matches trades as well as disseminate prices. Any match trade falls into the clearinghouse, so the clearinghouse is responsible for settlement. And only clearing members are allowed to access the exchange and clearing house. So anyone who accesses the exchange needs to go through a clearing member. So any end user, basically. And the clearinghouse at the end of every day conducts settlements. And the way they do it is that they require their clearing members to pay in their net delivery obligations to the accounts that they control, so into the clearinghouse account. So any net delivery obligations of cash need to be delivered to the clearinghouse, and any net delivery obligations of securities need to be delivered into the clearinghouse securities account. So when the clearinghouse controls both legs, if you will, of the trade, they conduct the payout to the brokers. So this model is, should I say, highly efficient within a system where you have trust and legal recourse. So legal recourse is super important within a jurisdiction with regulated financial institutions. It becomes possible with the legal recourse aspect. So clearing members only have to post margin to cover the day's trades. So in crypto markets, as the ledger system works very differently in terms of blockchains, where the user controls the key, where the premise is upside down, the way markets have developed right now is that the exchange that supports trading in any crypto assets is required to become a custodian, as well as to have the cash delivered to them in a pre-funded model. So here the users need to pre-fund before they trade, due to, one, there's not much legal recourse many times to go after clients to get them to deliver after the trade. And two, in order to ensure that timely discharge of the settlement obligations, the exchange needs to control both assets for the users who trade in them, so that the withdrawal can be made. But this, should we say, goes against the entire premise of what blockchains are meant to be and how they are built in terms of that you're meant to control the keys yourself. So here, in order to guarantee delivery versus payment, because few other models exist, you're required to upload your assets or hand over control of them to the exchange. And if anything happens with the assets that you transfer to them, many times there's no legal recourse, as we have established many of the hacks and thefts, etc., which have occurred within the space. If such a thing would happen on the bank side, there's always legal recourse and you can wind things back, but on the blockchain side, it's not possible. So finally, so what happens if we have crypto markets where you can trade, where both the, should we say, the payment asset as well as the delivery assets or the security assets are issued on the same network, where users control the keys to all assets, then it becomes possible to have, in addition to the centralized exchange model, you can have decentralized models where users can trade assets via swaps with each other by posting UTXO commitments. That's a whole other speech of how exactly the swaps work. But the important thing here is that for any company within the space, in the blockchain or Bitcoin space, who wants to list their equity, they don't need to head over to an exchange and pay large fees to get a listing, etc. It's very easy to just do your own registry management within the issuance tools that are available through AMP. So I would strongly recommend anyone who has a company or if they plan to issue debt notes, etc., to actually look at using the liquid asset management platform as the registry for those assets due to all the benefit it brings. So with this, we also have the option to have models where there is no trust between the users, where users control their own keys and assets at all times, and they can swap directly between each other without having to trust any third-party custodians. Nor do they need to pay any listing fees to have their assets listed on an exchange. Okay, so that's a bit about the structure and financial markets and how we can build them using side chains, specifically the Liquid network. And with that, if we look at how far have we come in terms of the securitization on Liquid, so Liquid has, I think, 6 or 7 different assets issued on them. One is the Infinite Fleet security token. The other is the Blockstream mining note, which is a hybrid debt instrument, I believe, which will mature once the 3-year period is up. We have SideSwap. We tokenized our share registry. Here in Sweden, there's a very permissive legal system around how you manage the internal registry of private limited companies, where the board of directors is charged with the management. So it's very easy to tokenize it and put it on a blockchain. So I think SideSwap may be the first equity issuance that has been issued as a security in a permissioned environment on a blockchain. It's important to note that the permissioning is super important from a securitization angle, since very few jurisdictions support bearer assets, and I'm not sure it's even desirable with bearer asset type of securities where there's it's very difficult to maintain the registry. Lastly, we have something called the Aquarius Fund. Their unit tokens are also listed on the Liquid network. There's a number of other securitizations coming up during the remainder of the year, and I think that Liquid is one of the few blockchains that has actual securities issuances with the permissioning structure. And if anyone has any interest in conducting such issuances, if you don't want to do so yourself, there are 3 different registration agents on Liquid. One is Stoker, who assisted with the Blockstream mining notes. There is Digital, which I believe is an American company. They're working with the Merge exchange so that you can tokenize companies, I think, using Seychelles structures among them. And they will take you through the process and manage the entire listing and all the regulatory requirements. For any US-based company, I would recommend Digital. PegX is a subsidiary of SideSwap, and it is able to assist with registry management, but it can't help you set up the legal structure around the issuance, such as Digital and Stoker, who can provide the entire package for you. The different exchanges that support Liquid right now are one, Bitfinex Securities, the Merge exchange. Digital also has a marketplace, which I should mention. All of these are custodial exchanges where you need to pre-deposit your securities with them prior to trading, and then you can withdraw. On SideSwap, we obviously offer the non-custodial swaps, so that anyone can list their assets without having to go through a registration process with an exchange. So it's open access, basically. That's mainly the big parts of the presentation. So if there's any call to action, I would encourage everyone to learn more about sidechains, learn more about ledgers and permissioning, and how we can build a capital markets around Bitcoin so that Bitcoin truly can scale, and how Liquid could play a part in that. If you haven't tried Liquid or any sidechain to Bitcoin, I would suggest dipping your toes and getting comfortable with it. We have a full testnet suite if anyone wants to try things out without having to commit actual balances. And if you're even more adventurous, I'd employ you to try issuing an asset, and even if in a testnet environment, to see how they trade. And we're happy to list any assets issued by anyone who wants to get started on Liquid. How do you foresee the current regulatory debates being played out in the US affecting this Bitcoin base through Liquid financial system model? Okay, good question. So in the US right now, there's something called, I believe, the Howey test to determine if something is a security or not. Bitcoin clearly isn't. I would say liquid clearly isn't. There's, there was no pre-mine, there was no issuance, there's nothing to monetize. Anything that's issued on the network, however, could be construed as a security. But then again, liquid is built for permissioned issuances, so that one, you can control your share registry if you issue your asset as a permissioned asset, but you obviously have the option to issue as a bearer asset. But if you do issue as a bearer asset, something that masquerades as a security, you may want to be a bit cautious. But for Liquid's perspective, having all the building blocks to be able to have securities issuance with the permissioning structure, I think, is a very, very strong selling point for Liquid, and will be one of the the building blocks on which Liquid can really promote itself going forward. Okay, so Wes, are you seeing any banks, say in G20, that are particularly receptive to the Liquid sidechain model for securities? So at SideSwap, we've generally been under the radar pretty much for quite some time, just heads down, focusing on development. It's just really lately that we've started to put together material, and where we're hoping to do more presentations and run the gauntlet of conferences, basically. But even after the Prague conference here, we had one big bank, which is a conglomerate throughout Europe, who has looked at securitization of securities, and they wanted to engage with us and see if there was a discussion to be had to be able to issue securities, because they thought it wouldn't be possible to have securities issuance within a permission structure. But after my speech at the conference, they reached out. So I'd say that's the one instance of any examples I could give you. Okay, assuming you all did extensive market research before committing to a particular sidechain blockchain, why Liquid versus other Bitcoin solutions like Rootstock? Well, that's a good question. I don't know much about Rootstock, and we started this journey several years back when we started playing around with the Liquid swap tool. So I think back then, Liquid was the only viable alternative. But the one thing I would say that Liquid has going for itself very strongly, which is the fact that we have one tether issued, and two, the strength of Blockstream and all the core devs behind it, as well as the beginning of capital markets development. I don't know how far Rootstock has come in development in terms of securities issuance, what proof of concepts they have, if they have stable coins issued which are widely accepted, etc., etc. Okay, are we seeing high demand for SideSwap since the drama of the US? Well, I would say the higher demand for SideSwap has come as a result lately, as a result of the drama with the network fee, when multiple Lightning users started using Liquid a lot more, as opposed to going through the Bitcoin leg. And this was helped a lot by Bolts transitioning to Liquid. In terms of higher demand for SideSwap since the drama in the US, one thing that can be said for our model, the swap model, is that if two assets are permissionless, we allow the swap for them to take place without doing any KYC or AML. But if the assets are permissioned for the swap to take place, users need to be whitelisted with whoever the issuer is of that security. In a sense, we would be hoping that demand for, should we say, Liquid solutions would pick up, but I think there's a general, shall we say, absence of awareness around Liquid. So at the conference, I don't know how many was in the crowd, anywhere from 200 to 500. It's very difficult to estimate or guesstimate when you're on scene with spotlights pointing towards you. But the presenter asked the crowd how many people have used Lightning, and lots of people had. And when they asked about Liquid, I think there's between 5 and 10 hands. So I think Liquid still has a lot of room to grow. If we can get word out around the securities issuance, as well as the opportunities for should I say, trustless swaps, I think these will be strong selling points, as well as, okay, so this is more about the SideSwap platform. There's talk of you integrating Lightning. Can you confirm, and if so, what capacity? Well, if we do integrate Lightning, we're dev constrained. So from our perspective, it's more to support other services such as bonds, to be able to have the very easy within the wallet just to pay in and pay out to the bonds swap. So right now, for the near term, we're not going to focus on building our own liquid or Lightning solution. We will help to support other Lightning providers. Also, when liquid swaps for Jade, so Jade has a firmware update which allows now for swaps to take place from hardware wallets. We're busy right now integrating it, but there was together with the firmware update, there was also a change in how range proofs are handled. So there's quite a bit of work that we need to do on the back-end side in terms of how swaps work within our matching engine and how they are handled. So there's a lot of test cases to be written to make sure that everything is done correctly. So I would say, anywhere from another 4 to 8 weeks, and hopefully we should have hardware wallet swaps on Liquid then, so that anyone can trade non-custodially between each other, both as a maker and a taker, without having to use a online wallet. At the same time, we're also looking at if we can separate out the private keys, so that we can have watching only wallets, and so you can have offline signing of transactions, because when you do the offline swaps, you have plenty of time to sign. I mean, even if someone doesn't have any questions now, feel free to reach out via Telegram or post anything in the SideSwap channel or email, etc. Super happy to respond to any questions, and